Hi, welcome to the Market Alert for Tuesday, the 8th of April 2025. So, futures slide after Trump threatens China escalation. White House denies 90-day pause. Fake news, we'll look at that in just a moment and in more detail when we look at the 2-minute chart from yesterday. US stocks were volatile amid tariff-related headlines and fake news. And the headlines just go on, don't they? FTSE falls again on opening after Asian session. US markets plunge, opening with FTSE struggling with Trump tariffs, and this is the news yesterday. We saw the market jump 1,200 points. That was the DAX. White House dismisses rumour that led market to jump, and there's more of that. No one at White House is aware of 90-day pause. And then to the more mundane stuff, economic news, nothing today, CPI numbers tomorrow. So we'll see what happens tomorrow with regards to those, and FOMC meeting minutes as well for tomorrow night as well. Actually, the CPI is out on Thursday, not Wednesday. Thursday, they've moved it back or pushed back a day there. Right, let's have a look at the carnage from yesterday, or so-called carnage, and see what the markets did and kick off with the Dow. So yesterday, the Dow obviously moving down, but then coming back. There was some buying around yesterday as well. Far as I'm concerned, the market's finished its downward trajectory at the moment, and I'm going to show you why. Because if we have a look at the VIX chart, anybody that's been following me for the last 30 years will know that when you get these big spikes in the VIX or a doubling of the volatility, the market tends to put in a bottom. So expect a much calmer and more to the upside sort of day today. And that's what we're seeing with the Dow for yesterday. If we go to further time scales, you can see we traded down to 62% of the monthly chart. That's called the golden ratio. And in the weekly chart also, you can see the market reversing off close to the 200 MA. And in the 30-minute chart, we spiked up at the start, but that was on the rumour, of course, that the Trump tariffs were going to be postponed for 90 days. You can see now that the market's settling down and going to be heading back to the upside, back towards the psychological 40,000 for the Dow. In the German DAX, let's kick off with the monthly chart here too. Again, you can see 62.78 down to the 20-bar moving average. No big deal, to be honest with you. It's all media driven, and you can see there yesterday moving up very strongly in the afternoon on those rumours, and then reversing when it was confirmed as fake news. Again, down at the start of the session, spike in volume, market is then brought back. And then overnight, you can see also starting to move as well. Above the DP, above the close, so free to move back to the upside and head towards those all-time highs. So once more, it might seem bonkers, but I've seen this so many times. Sorry, with COVID, 2007, 2008, took the QE. Interest rates are going to be being pushed lower as well by Powell, whether that's at the next FOMC meeting, but there'll certainly be, if the carnage continues, then there will be a cut in rates, and that will just boost the market back. The elite are not going to let this market fall out of bed and have a 40 or 50% retracement. I may be wrong, but I don't see it myself. Not based upon the last 17 years or so that we've seen the markets being pumped to the upside. Any pullback has been a buying opportunity. And in the S&P, again, monthly chart, 62% retracement. Weekly chart, reversal off the 200 MA. Daily chart, huge buying. Market oversold, needs a bounce. How far it bounces, well, that's up to the traders to decide that. But if we have a look from here down to here, you will see that we've got some potential to rally back after the last 3 days. Markets don't just continue to decline, and they're certainly not going to on this tariff argument. Eventually, one side or the other will acquiesce, and it will all be over, and off we go again. So market pulling back, and then again that fake news yesterday afternoon. And in the FT 100, again, let's go with the monthly chart, 78% retracement, back above the 50 EMA. Weekly chart, reversal off the 200 MA, and the 100 daily, lots of volume there as well. And the 30-minute chart, fake news once more, market making its way above the DP at the moment. The only thing that will see the market move lower is the embattlement between China and USA. That's the only one at the moment, but everybody else seems to be wanting to come back and negotiate. Now they realise that Trump isn't serious, like him or loathe him, he's serious about this particular the situation and deal, and if they want to come and negotiate, then he'll negotiate, but if not, then it will remain. So the last thing we need is a full-blown global trade war. This is just an ab reaction to begin with, so we'll just have to wait and see what actually transpires. Meanwhile, the US dollar bouncing a bit more yesterday, things settling, the dollar down there back to 102, where again the market is struggling to hold just a little bit there. So let's have a look at the metals for yesterday, an interesting day there. So kicking off with silver, we can see there was lots of buying. No surprise really when we got down to $30. We have a look at the monthly chart. We're just sideways there. No great shakes compared to the stock markets. And the weekly chart, the same, starting to reverse and move back up after creating a double bottom there. And in the daily chart, like I say, we can see the buying coming in. They were oversold as well. And in the 30-minute chart, market spiking up in the pre-market yesterday and holding throughout the session now and above the DP there at the moment. It needs to stay above $30 an ounce. Massive move last week, 12%, but then rallying back at 9% on during Monday's session. Meanwhile, gold, I got a bit of a hammer in yesterday, I'll show you in a second. But no major, again, pullback here, narrower range than the previous day or previous 2 days. So the market holding there, 30-minute chart just back above the 3,000 level. But look at yesterday afternoon, evening, they pumped the market to the downside there. But that didn't last for long, and the market's been back up in Asia. Chinese are buying gold like it's gone out of fashion. And yeah, let's have a look at the gold-silver ratio. So no surprise there, we hit the 104 level yesterday, and now we're starting to come back a bit. We're actually below 100 now. It looks like the market wants to move up a bit here, but I think the 104 would take a lot to take out now. So we're starting to see a top form in the gold-silver ratio. So we'll look at the market activity for yesterday. And it was certainly an interesting day for yesterday with regards to the German DAX. There were no signals because the volatility was just huge. I mean, these are 2-minute bars, and you can see they're over 100 points a time. So the spread was widened to 8 points on the DAX as well. So let's just work our way through. You can see the decline before the open. Then we had the market find support. The buying came in, and the market moved back to the upside. But the interesting activity yesterday is the afternoon session when the market saw that fake news hit, and I thought, what on earth is going on? I've never seen anything like it. So you can just see it here, and it just pumps and pumps to the upside, and then this is when the news hit. This is when that 90-day postponement hit the market, and it just shot up. Then they got a confirmation it was fake news from the White House, and down she came. I mean, these are massive 1,200 point moves, as you'll see there. I thought, well, it's going up. This is looking good. It went up with the Dow. But when that news hit, wow, it was, I mean, look, we're going 100, 200, 300, 400 points in 2 minutes. So, like I'm saying at the moment, again, and the same thing repeated for another 4 minutes. So all we need now is Powell to come out and say, okay, we're going to cut rates because of what Trump's done and all the rest of it. They despise one another. And then you'll see the markets move exactly the same again, because it'll be getting closer to zero on the interest rates by the end of the year, and probably back to QE as well. And then mission accomplished. We're back to where we started in 2009 all the way through to 2023, I think, when QT came in. It's either 22 or 23. So, yeah, it's a mess. It's kicking the can scenario still, but a bit stickier and trickier, to say the least. Okay, let's have a quick look at where we are overnight. And you can see at the moment we're towards the close. We're below the 200 MA in the 2 minutes. We've got psychological level there. We're back above 20,000 as well, which is good news for those that trade the DAX. You can see there's the 20,000 level. So the market trying to hold at this at the moment. So let's see if it manages to do that during today. Right, that will do it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.